Welcome to Changing World, New Opportunities. This podcast is brought to you by the DC Investment Forum and hosted by me, Louise Farrand, and my co-host, Dave Whitehair.
This season, we're talking to the UK's leading master trusts. Millions of members and people in the UK now rely on master trusts for the future of their retirement finances. And we were interested to know how master trusts are investing and what the future holds.
In an uncertain world, how are they managing risk? And what's next on their agendas?
The DCIF's mission as a whole is to shine a spotlight on topical DC investment issues. And you can learn more about our research, follow us on LinkedIn, and subscribe to the show at dcif.co.uk.
Hello and welcome to Changing World, New Opportunities, the DCIF's podcast. I'm here with my co-host Dave. Hi, Dave.
Hello.
And I'm here with Jonathan Parker. Hi.
Hello. Hi, Dave.
How are you?
Very good, thank you.
Yeah. I've done you a little intro, John. You are an independent trustee and you're chair of the investment committee of the Aviva Master Trust.
Correct.
How am I doing so far?
Very good. Yeah.
You're like me, you wear another hat. You're head of DC as well at Redington, a
That's
consultancy.
right. Yeah.
We've known each other quite a long time, haven't we?
Very long time.
I was trying to remember when we first met. I think it was when
Yeah.
you were at Barclays still.
It was.
Ages ago.
It was, yeah. We worked together on a couple of bits and then we did something with Redington.
Yes, we
age
did.
responsibility.
I'd forgotten about that. Yeah, we did.
Yes.
We did do that.
Yeah,
That was nice.
that's right. It was.
Yeah. I'm very excited to have you here. Thanks for coming.
Yeah, it's been a really interesting conversation. Obviously, Aviva, one of the largest, most established financial product providers in the UK,
Yeah.
and now with a large master trust.
Yeah.
And I'm looking forward to this conversation because, unlike some of the other conversations we've had, this is going to be more from the trustee perspective in your role in that capacity. So, plenty to talk about. Let's get into it.
Definitely. So, John, I've done a very kind of high-level intro, but tell us a bit
Yes.
about yourself and your career path and how you got to where you are.
Yes, so I started as a DC benefits consultant.
Yes.
So doing lots of things
You
like
did.
provider selections and member communications and used to do lots of presentations at companies to people setting up DC schemes.
Yeah.
And then I specialised in investments a couple of years after that, and that was at Watson Wyatt.
Yeah.
And then I went through sort of three, what I call sort of proposition kind of product roles. First at Zurich, so Zurich Corporate Savings, and then at Barclays, which is where we met.
Yep.
And then I had a stint at Dimensional Fund Advisors.
So you did.
So yeah, supporting them sort of developing investment and retirement products outside of the US. And then I joined Redington, and about the same time I also was really fortunate to pick up the role on the Aviva Master Trust as well.
Amazing.
So I've been on the trust for 8 years now, and about sort of 6 of those as chair of the investment committee.
Nice.
So, could you start off by just giving us an overview of the investment strategy that the Aviva Master Trust adopts, the sort of asset classes it uses, and how it will glide someone towards a retirement pathway?
Yes. So because, and you rightly mentioned, Dave, that Aviva is a sort of a broad market insurance company. So they support, I think, about 12 million customers across all their product lines. And because of that, actually, the employer base that we have within the Master Trust is equally very, very broad. So we've got really big kind of FTSE 100 employers that have £1.5–2 billion worth of assets within the Master Trust. But then we've also got sort of smaller and medium-sized employers as well. And because of that sort of broad employer base, the investment strategy has been quite broad as well.
Yeah.
So we've got a number of different sort of default options,
Right.
aimed very much at the specific employers within the trust.
Right, to suit each profile of the sponsoring employer.
Yeah, exactly. And we've got one's aimed at charities, for example, with a much more sort of ethical stewardship investment base. We've got Sharia options now. Our main default is called My Future Focus, and that is sort of well diversified from an asset class perspective. Reasonable proportions in equities and private markets now. So 100% allocation to equities and private markets during the growth phase.
Right.
And then diversification into high yield emerging market debt, other types of fixed income assets, and cash during the glide path. And then we've got a couple of other default options as well. Over the last 2 years, we've worked very closely with Aviva to sort of harmonise the design of those different lifestyle strategies.
Right.
So they all follow a similar kind of structure
Right.
now. So you've got sort of a very much a growth phase that takes members up until 15 years to retirement. And then you've got a sort of at the start of a consolidation phase between 15 and 10 years. And then you've got a sort of gliding into retirement phase. So structurally, they all look very similar.
Yeah.
But the sort of specific asset classes and sort of level of ESG integration and that type of thing does differ across the various defaults.
Wow.
Brilliant.
Interesting. So obviously we've seen a lot happen over the last couple of years. Have you evolved your investment governance? Are you doing anything differently as a result of, I suppose there's a lot going on in the global economy and politically. Have you seen a reason to change what you're doing, or is it kind of a keep calm, carry on type situation?
No, we have. I think with the consolidation agenda and just the number of members and assets flowing into master trusts now, it's required us as trustees to sort of further improve our governance in a number of areas. So on the trustee board, for example, we have recently taken on a new trustee with a very strong sort of investment and private markets background.
Right.
So that's one way in which we've at a trustee level improved governance.
Yeah.
We've also worked closely with Aviva to support them in sort of beefing up their internal governance over the default options.
Right.
So they now have a very thorough sort of annual review cycle for each of our default options.
Yeah.
And they've taken on new people into their team in order to support that. We also, at the trustee level, work a lot more closely with our advisors as the type of asset classes has expanded. We've called on our advisors perhaps a lot more than we did, say, 5 years ago, to do kind of deep dives into private credit, infrastructure equity. Those are a couple of areas that we've recently introduced to My Future Focus. So we've worked more closely with advisors. And then the final area would be on the fund management side.
Yeah.
So the two main fund managers we work with are Aviva Investors and BlackRock. And we've always seen them, pretty regularly. But we've sort of requested, I guess, more senior and specialist support from them to ensure that, once the mandate's been designed, that we are, ensuring that the decisions that they're making are aligned to the mandate and ultimately, paying off for the members of the trust.
Right.
A question that's kind of linked to this is how are you as a trustee board thinking about the diversification within the investment offering? You've referenced new asset classes have been introduced.
Yeah.
But this is a big theme in DC, always has been. How's it been evolving for you?
Yeah. So it's, for me, this has been one of the most difficult areas, actually, because diversification across asset classes, so particularly out of equities, has been quite challenging in terms of performance.
Yeah.
So, we have a diversified approach, but asset classes like real estate, even some asset classes that you would perhaps have expected to deliver kind of equity-like returns, EMD, some of the more sort of interesting fixed income assets just haven't performed as well as equities. And because of that, we've had some really interesting and challenging debates. I don't think I think it's the industry as a whole around sort of the continued value of diversification.
Yes.
And whether we've got the focus right within our governance about risk and return.
Totally.
I think the narrative in the market has really changed in recent years, and there's been a lot more focus just on performance.
Yeah.
The new VFM framework that will be coming in over the next kind of couple of years, has past performance as kind of the first area that you're required to assess yourself against. There's been much more of a move to compare performance to other master trusts in the market, and I think particularly if you're a master trust with a commercial angle, like Aviva, there have been a lot more questions from new employers coming into the trust, the advisors that they work with, around past performance, and it's been difficult to continue to make the really valuable case that actually equities aren't going to go up forever, and that it is important to also continue to think about risk within that growth phase. So from a diversification perspective, we have alongside others, we've increased the allocation to equities over the last 3 years, but we've also increased the diversification within the private markets sleeve.
Right.
This is within my future focus. So we used to just have a real estate allocation. We've now introduced private credit and infrastructure equity. But it's still 90% equities. And obviously those equities themselves are very well diversified. But actually that kind of cross asset class diversification, certainly within the growth phase, has perhaps been more focused on equities than almost at any time I've seen it for a long time.
Yeah. How do you go about accessing the equity allocation? Is that market cap? Is that climate integration, factor based? It's
a combination of factor based and climate. So actually, I ought to distinguish between our two main defaults: my future focus and my future. So if I start with my future focus, so the asset management in there is all Aviva investors. The equity allocation within the underlying funds has sort of very strong kind of ESG tilts within it. It also has sort of climate carbon reduction targets within it as well. Aviva investors, we've given them the mandate to do some tactical asset allocation between asset classes, so that gives them leeway to take advantage of price dislocations in the market, or if they see particular opportunities. But the equities, fully ESG and climate integrated, and sort of elements of active management as well.
So we're going to talk a bit more about private markets in a minute, but first of all, just on that kind of mega trend piece, I guess. So obviously consolidation's a big trend in the market. How does that affect the way, if it does at all, that will affect the way you look at the world from an investment lens? I guess, does it affect you operationally? The thought of growing, does that kind of change the way you invest at all?
Yeah. So it's interestingly, so for Aviva, that they already manage. I'll get the numbers wrong slightly, but 100 to 150 billion in pension assets. So actually, they are very used to dealing with scale, and operationally are already set up, for the Master Trust to grow from, I think we're almost at 16 billion now, with a path to 25 and to 30 over the next kind of 5 to 7 years. So I think from our perspective, that side of scale doesn't concern us. I think from an investment perspective, what scale should do is open up a broader range of, particularly within private markets, opportunities for investment, the opportunity potentially to do some more kind of co-invest within certain asset class sleeves, Some of the asset classes that we have recently brought into our new private markets offering, My Future Vision, which was launched over the last couple of days.
Oh,
Some of those asset classes just wouldn't have been kind of possible or practical at the scale that we were, say, five years ago. And what it should also do, at least over time, is hopefully enable Aviva and ourselves to negotiate costs down with asset managers as well.
I'm just building on that theme of private markets, and you've alluded to some of it already, but what's the overall strategy with private markets, and where do you see that headed in this kind of medium term?
Yeah, so Aviva's a strong supporter of Mansion House Accord and was a signatory to that. Even before that initiative, I said we've had an allocation to real estate within My Future Focus ever since it was launched, so probably 7 or 8 years. We've been working closely with Aviva over the last couple of years to diversify that private market sleeve within My Future Focus, and the way that we and Aviva have opted to do that is to use the broader capabilities within Aviva Investors, and actually Aviva Investors has got a very strong private markets capability. They've been big supporters of the LTAF regime and have launched, I'm going to get these numbers wrong again, about 5 or 6 LTAFs.
Yes.
So I believe they're the asset manager with the largest number of sort of distinct LTAFs in the market now. So we have taken advantage of that and have made allocations to the private credit and infrastructure equity funds that they've launched. So that's within My Future Focus, and that sleeve within My Future Focus will continue to evolve. There are still, I'm amazed we've got this far, not talked about price, cost, fee budget challenges. But that we are constrained to a point within the investment budget that we have within each of the investment options. So there will come a point where it's going to become more challenging to build out that private market sleeve within My Future Focus. And that was certainly, at least in part, one of the drivers for looking at how else Aviva Master Trust could take advantage of sort of a broader range of private market opportunities. And again, working very closely with Aviva over the last 12 months, and My Future Vision was announced a couple of days ago. And that will be coming to the Master Trust's Investment Committee at the next meeting for sort of final kind of sign-off and approval. We've got our investment advisors at the moment looking at that. And sort of our sort of purpose with that strategy was to have sort of a really kind of meaningful allocation to private markets. So it's going to be a 25% allocation within the growth phase to private markets. We'll be working, again with Aviva Investors, but also we have, again alongside Aviva, chosen a number of external managers to support that solution. And there's going to be allocations to private equity, venture, infrastructure, private debt, real estate. So yes, I think we really wanted to make that a kind of differentiated solution in the market. And I think really excited. And I know sort of the employer base in the market, it feels like it's ready to have that kind of conversation now around private markets, and certainly from a risk return, a member outcome perspective, we're expecting that one to deliver really good returns.
It's really interesting your perspective and the wider kind of trustee board perspective of these new private asset classes being introduced to you and proposed to you as new investment ideas. Kind of how's that been as a journey for the trustee board as a whole? You referenced, bringing on specific capability, leaning more on the advisors community.
If you look at how the master trust markets it evolved, we're a lot of the master trusts are now very significant asset owners.
Yeah.
And if you look at other sort of significant asset owners around the world, whether that is DB pension schemes or sovereign wealth funds, the big US endowments, if you look at kind of how their investment strategy has evolved as they've grown with scale, you have to take advantage of all of the best investment opportunities that exist, wherever they may be, and however you kind of get access to them. And I think that's what the DC market in the UK has been waiting for, really.
Yeah.
I think there has been a cost, a genuine cost constraint challenge. But again, it feels like the conversation and narrative around that has evolved. And if you look out sort of 15, 20 years, a lot of the master trusts are going to be 100 billion in assets. And at that scale, again, if you look at other big DC markets, like, Australia is the one that's cited the most, but elsewhere as well, they have sought to, really invest on a global basis and really put their members' money to work in the best way that they can. The example is often cited around, there's more Australian DC pension schemes investing in, kind of prize UK private market opportunities than there has been UK pension schemes, and that seems a bit odd. But it definitely feels like everyone's on the same page now. The government, the regulators, the schemes, the employers. It feels like we're all kind of working to a similar goal.
For sure.
And feels the investment conversations and the opportunities are really, really exciting.
Yeah, awesome. You've talked a bit about private markets and the introduction of private markets, I think mostly in the growth phase. Is that right? Do you see it also going into later life for members at this point? Like how do you see that playing out?
We do, absolutely. Yes. So the My Future Vision option will have a 20% allocation to private markets, right up until the point of retirement.
Okay.
The makeup of those private markets will look slightly different to what it is during the growth phase. But there are ways of managing liquidity within funds that actually when you look at the sort of the dynamics of a big DC master trust, where you've got tens of £1 billion worth of assets, generally very, very cash flow positive. You've got, new members coming in all the time and a smaller number of members kind of wanting to take their money out. There's lots of opportunities to kind of match money coming in with money going out. Because, certainly the way that Aviva manages its funds, their unit-linked pricing process is very, very flexible. So, the private markets allocation will be sitting alongside some, very, very liquid assets as well. Right. So you can manage, for kind of daily cash flows that you do get with DC, you get members switching, you get new contributions coming in all the time. If you're not able to get into or come out of a particular private market fund or pool at a particular time, you can go into something else, and then once the kind of liquidity window opens up, then you can sensibly manage the allocations back to within SAA ranges. So there's lots of ways that you can manage the liquidity. Aviva have done a lot of kind of stress testing to make sure that if particular catastrophic market events happen, or you get a large employer, for whatever reason, that may want to take their money out,
Yeah.
or indeed, a large employer that wants to put their money in, that's all been thought about, and that the mandate and the guidelines within the funds are set up in such a way that it would hopefully not be a situation where we wouldn't be able to get money out of the fund at all.
Is there anything that you would change kind of in terms of the way the regulation is or the way the market operates that would make it easier to invest in private markets, kind of particularly into that later stage of life?
So I think the changes that the FCA brought in with the LTAF regime and the updates to the permitted links regs has, at least certainly from Aviva's perspective, it gives us enough to work with. Whether that's during the growth phase or at the retirement phase. I know there are other master trusts that aren't structured in the same way as Aviva, so they operate outside of a life company structure. So potentially have a little bit more flexibility in parts, but certainly we've not found that we've had to sort of dilute in any way the amount of assets that we can put within private markets or the quality of the fund management at all. I think at 25%, I think Nest is maybe coming up to 20-ish. I know you've talked to Nest as part of this series.
To remember now.
Yes, yeah, but I think that 25%. I think for some of the market is where over a period of time they're kind of aiming to get to. So a long-winded answer to your question.
No,
I think the regulatory regime seems to be working well.
Great.
And I said enough ways of managing liquidity within a life company environment that certainly we don't foresee any problems.
Perfect.
Moving on to another big investment topic for the DC market, sustainability. You've referenced earlier around integration of ESG and specific allocations to some private assets.
Yeah.
Where is the Aviva Master Trust on its sustainability journey, and how are they measuring progress?
Yeah. So, I mean, kind of really well developed now. I think Aviva and Aviva investors, as a kind of sponsor and funder of the Master Trust and primary asset manager, have always been, right at the leading edge. Certainly from my perspective, in terms of how they think about sustainability and embedding that within their investment processes. So my future focus, for example, has had sort of full ESG integration across all its asset classes for about 5 years now. Now the way that's evolved has changed. So Aviva investors have a proprietary way of thinking about ESG, and they will tilt allocations within both the equity and the fixed income funds. They are very, very active in terms of stewardship and engagement, and certainly within the Master Trust we get really, really good access to the people in AI who are talking to the companies all the time, leading members of a lot of the big industry groups, and we've been really, really pleased with how they've integrated it within my future focus. Within my future, which I've not talked about too much actually so far, I mean, BlackRock's the primary asset manager there.
Right.
All of the equity assets are ESG tilted. They've also got explicit sort of carbon reduction targets within them. The one thing that sits across all of our assets is Aviva's net zero ambition. So as an organisation, they are sort of aiming at a 2040 net zero ambition, which is is sooner than a lot of other pension schemes in the market. We talk to them very regularly about that ambition and kind of how that's going to be achieved over the next, particularly kind of 10 years. The kind of the early phases of that net zero ambition have been achieved.
Right.
They had interim targets at 2025 and 2030. The 2030 to 2040 journey looks kind of it looks really interesting.
Yeah.
You've got so many dynamics going on in this market. You've got a climate that probably isn't gliding nicely into a kind of 1.5 degree world.
Yes.
The narrative around climate and the commitment globally to it feels, I think, more challenged than it has done for a long time. From an investment perspective, the question then comes: if you've got a world that's and an economy that's looking a bit off track, what does that mean for your investment portfolio?
Yeah.
With the ambitions that you've set, and I think that's probably for me over the next 5 years going to be one of the biggest areas to work really, really closely with Aviva on. It's going to be a trade-off, right? You could absolutely make some investment decisions that would reduce your carbon emissions.
Yeah.
However, from a member outcome perspective, and our primary aim clearly is to continue to deliver market leading returns, financial outcomes for our members. So sort of marrying that with the current narrative around net zero and climate, I think is going to be really, really interesting.
Yeah. So watch the space, and we'll come and talk to you again in 2030.
Yes.
See how it's going.
Yeah.
So more broadly, talking about regulation and policy a bit, I mean, the big thing at the moment seems to be the pension schemes bill. Is that influencing the way you invest at all, or is it any other kind of broader decisions that you're making in your role?
Yeah, so not directly on the investment,
on the investment
side. I think sort of indirectly. Obviously, the VFM, the new VFM regs will flow from the pension schemes bill.
Yeah,
and if the trend towards kind of more benchmarking, more league tables, continues, then I think indirectly that is going to have,
of course,
have an impact.
Yes.
And the VFL, I know the pension schemes bill is still in bill format, and there's room for it to potentially change.
Yeah.
But certainly some of the early discussions around, what pension providers might have to do if the trustees didn't feel that the pension scheme was delivering value. I know this is still evolving, but there was talk of an amber rating would mean that you'd have to sort of pause accepting new employers into the trust, and that's a really kind of difficult thing to kind of think about for a Master Trust and a trustee board.
Yes.
So I think there is we need to go into that sort of thing with our eyes open. I know in Australia they've brought in sort of benchmarking, particularly around returns, and I think that the feedback. Some colleagues within Aviva went on a fact-finding trip to Australia and New Zealand earlier this year, and I think there was quite a sort of mixed feedback, I think, in terms of how well that sort of performance benchmarking
works.
Has gone down in Australia. So I think we need to be alive to that. So that's one aspect.
Yeah.
There's obviously at the moment there's the potential for the reserve, the government to have the reserve power within the bill if any of the big master trusts don't achieve the Mansion House Accord kind of objectives. That's not going to be a problem for Aviva. It's they're very kind of positive signatory of that, and we'll be absolutely thinking about that as we evolve our investment strategy going forward. But that's in there as well. I guess the other bit which could indirectly affect would be the proposals around guided retirements, and I think a lot of master trusts do already have a very well thought through sort of retirement journey. In fact, we within the Master Trust launched a guided retirement proposition earlier this year. But again, that has the potential to, I think, see that retirement journey evolve a bit. So within the Master Trust, our guided retirement journey has it's a drawdown strategy initially, but then as members approach age 80, the asset allocation changes, and they glide path into an annuity purchase position at the age of 80. So the trustees work very closely with Aviva. It took nearly 2 years to kind of get that launched, because it was really complicated, kind of marrying up some of the FCA and TPR regulations around retirement and communication. But certainly the kind of the market testing and the member feedback that we've gotten from it has been really, really positive. I think it does feel like that there comes a point within a member's retirement phase where kind of locking in a bit more certainty is going to become really, really important.
We talked about this, haven't we, about as we get to a point where we have Generation DC retiring and learning how that generation actually goes through retirement. Lots of the data and information on what's perceived to happen in retirement is perhaps some of it very outdated, but also evolving now as we have people retiring on a full life of DC. So it'd be fascinating to see how that develops based on the data. It's
so hard, and again, it's such an interesting area, because with the auto enrollment regime, you can pretty much go through your entire working life without having to make a single decision about your retirement. Because you're auto enrolled into your employer scheme, they set the contribution rate for you. Your master trust or your trustee board sets the investment strategy for you, and then suddenly at whatever age it is, you're kind of handed this pot of money and said, here
you
go. And it's such a complicated investment kind of set of considerations to take at that point.
Absolutely.
Now I think the targeted support regs from the FCA, I think feel quite promising. And it's going to be fascinating to see how the providers kind of work within those new rules, and kind of how that then gets presented to DC members, and whether it starts to make a real difference.
Exciting. Well, we've just touched on the future, and I guess these are our last few questions looking ahead. What's next on your investment agenda? What are you excited about at the moment?
So
all sorts of things by the sound of it.
So I think guided retirement is, we've launched it and we're really excited about it, and we're now going to see how members kind of use it. And we're going to be keeping a close kind of watching brief on that, and we'll be reviewing the sort of the investment strategy that kind of backs that solution over the next 2 to 3 years. So that's definitely going to be one. Private markets is definitely not going away. And I think it's going to be, again, really interesting to see, as some of these, more kind of slightly higher priced investment solutions start to hit the market, what appetite there is from employers to take advantage of that. So I think that's going to be really, really interesting. What I think is also probably going to start to happen is that we'll start to see a sort of a consolidation within the default market. So what I mean by that, we've seen some master trusts just have one default, so nest, and others just have one, and that default is used for for obviously all types of members.
Yeah.
Whether they're big pots, small pots, gliding into an annuity, gliding into drawdown. I say Aviva's strategy has been to actually kind of tailor their default estate, and the trustees have done this as well, and make them much more kind of targeted to specific employer types. I think it's going to be interesting to see again how that evolves. If again, depending on how the pension scheme bill lands, kind of how many defaults will need to get to that 10 billion scale by 2030, and then 25 billion by 2035 scale will be interesting. So I think we'll see a consolidation within the default space, and then I think there's always going to be new investment opportunities that kind of cross our path, that will be required to look at, and I think the final area is around self-select ranges. I know we haven't talked about that much yet, with master trusts now being sort of the main type of pension vehicle that most people are saving through. Often the range of investment options that members have within the master trust is very purposefully quite limited. So within Aviva, we've got about 25 fund options. A mix of passive and active. What we're starting to find from some employers and some members actually is a desire to have a slightly broader fund range. Yeah. But interestingly, particularly at the point of retirement.
Wow.
So,
what sorts of things have you seen being requested by membership?
So we've seen those. I'll generalise a bit here, but members with kind of slightly larger pots, who are perhaps a little bit more familiar with investing, they want to remain within the master trust, but they perhaps want to work with a financial advisor, and perhaps build an investment strategy that's kind of more tailored to their specific circumstances. Now that they can do that to a point, within the 25 funds that we have, but actually we're getting an increasing number of requests to have a broader fund range that feels a little bit more like a SIP, and that will enable these individuals to build slightly more kind of interesting portfolios that suit their
circumstances for you as
trustees. It absolutely does. Yeah, because from a kind of trustee duty, fiduciary duty perspective, any investments that fall within the trust, we need to ensure offer value and are delivering for our members, and that's perfectly manageable when you've got 25 funds and 4 or 5 different default options. If you've suddenly got hundreds of funds through a more kind of SIP like proposition, then that absolutely does present quite a new governance challenge that we'll need to work through. So it's quite interesting to see kind of how sort of master trusts they're kind of like almost like the gateway into the workplace pension. But increasingly, within a single platform, you'll have your main workplace pension through the master trust, but maybe you want to do a bit of kind of sidecar savings whilst you're working, or have an ISA for any additional savings, and then at retirement, great, happy to keep my money within the master trust, but I want to do something a little bit different on the investment side. So that's something that's over the last probably 12 months has started to come up more.
So sticking with the theme of the future, what's an investment trend or technology that you think will have a key role in reshaping pensions, DC pensions, over the next kind of 5 years?
Yeah, it would probably be remiss of me not to say crypto, because that's. Again, we've had a few requests. Yeah, a few inbound requests from members.
Wow.
To say, why haven't you got an investment option that allows me to invest my money in crypto? Now, there are some. I know the FCA in particular is kind of working through sort of the regulatory regime that it wants to kind of put around crypto, but it feels like the kind of the noise around it is increasing quite a lot. Now, again, whether you do that or not is a different matter.
Sure.
But I guess it's a new asset class that is now pretty sizable.
Yes.
It's measured in the trillions of dollars. So again, as a large asset owner over time, you probably want to be aware of it, and maybe see if is it even investable. At what cost? What's the sustainability kind of narrative like around crypto? So I think that's something that potentially will be looked at. Again, say flavor of the month, gold. Performed fantastically of late. Clearly an asset class that has been investable for DC's pension schemes, but has never really come up, I'd say, regularly in conversations about. But what you tend to find is, assets that have performed particularly strongly over recent times tend to suddenly pop up as those that some members are quite interested in.
The ones who are reading the papers.
Yeah. And outside of those, which I think are probably kind of long shots, I think continuing the sustainability theme, natural capital, I think is going to be something that we have looked at it. We haven't got sort of an explicit kind of allocation to it within my future vision on day one. But it's absolutely something that we'll be looking at down the road, and I think that it has to play a part alongside the net zero conversations, because it's kind of very difficult to see how you're going to solve the net part of net zero without something that something's going to need to kind of take carbon emissions out of portfolios. Yeah.
Fascinating.
And I guess related to that, do you have a pet underrated investment theme or asset class in DC right now? I don't feel like natural capital is really underrated, is it? I feel like everyone's talking about it. Do you think?
Yeah, no, it is. Yeah, I would say a little bit less so in DC, in my experience, than perhaps in other types of. So local government, for example, that they've been kind of really leading the way.
Yes.
Again, in my experience, in terms of allocations to natural capital.
Interesting.
But I think certainly from Aviva Master Trust's perspective, it's absolutely been on the agenda, but not something that we've got round to yet.
Mm-hmm. Oh, so exciting times. We'll probably try and catch up with you again in a few years and see how it's all going.
Yeah, no, it is really exciting.
Well, thanks so much, John. It's been great to catch up with you for the podcast. Really, really interesting. I've learned a lot. Thanks.
Cheers.
Thank you for listening to Changing World, New Opportunities, the DCIF's podcast.
Visit us online at dcif.co.uk, where you can read all our research, follow us on LinkedIn, and subscribe to the show.